People, it's the Crypto Sniper and we're having a look at the crypto markets. Yes, so a little bit of update. It's been a bit since we've done a technical update. By the way, yes, just apologies confirming that other aspect on the other videos regarding Pulse. It's just interesting for me to see what demand there is for this project given that it's been kicked into the long grass. Let's get back to Bitcoin though. I want to update you on the technicals of Bitcoin, and I'm also going to do a small one token that is going to show dominance, and I've got actually 3 tokens odd that I believe that are in the big 10, 15 to varies now. There's a bit of chop and change in the crypto market cap, but most of the usual suspects in the top 15. Which ones I think will be outperforming? You still know that we remain circumspect about the future for Solana, so you can take it as a given that that's not one of them. Let's just have a little look at Bitcoin though generally. So people get a bit excited. Oh, you flip positive. I put a tweet out and I just highlighted this. You're flipped back to bull. I want to make sure that everybody understands when you express a particular bias for direction, there are multiple time frames of activation. We of course go into great detail when we teach you about trading of the multiple time frames of analysis, and you go to the marketsniper.com to find out more about that. So you've got to always understand, if someone asks me, are you bullish or bearish? It's always on what time frame under review. If you're talking since the very inception of Bitcoin, actually most people should generally be macro bullish, because it started at whatever it started at. I don't know if it was a cent or a dollar, and it's 17,000 odd today. However, we aren't always talking on that time frame. That's a very long time frame, and often we're dealing with certain spells that we anticipate. So if I highlight a structure, something like this, which is a falling wedge structure, and a point that we've been grinding along a lower basing descending grind line like that, and that we've had a number of interactions. Don't forget, we call bull here on the falling wedge when everyone else was super bearish. So we aren't always perma bears, you know. Sometimes also just with the macro, it's easy for people to think you haven't changed much, you're just a permanent bear. No, we were the big bulls over here. We said this is one of those rare moments then where retail, even with moderate leverage, should do very well even without a trading program. That was the perfect target take for a first cup gold nugget trade, and that would have got you out. There was a head and shoulder there. We've covered this many times before. Breakdown this pause area, but this just brings us up to where we've this particular interesting line of reference. Now the most important values are in fact the horizontal line values. We project those infinitum into the future, and we expect them to remain relevant. However, inside the lower time frame in us, this is still a big time frame, this is weekly, but it is lower than when you're talking about inception of Bitcoin. We have been broadly since the 69 level, and I would argue there was already a real loss of momentum after this first head and shoulders. This was a marginally higher high that you got. This was showing fatigue coming for Bitcoin. This was the structure you were looking at that point, and then you had real clarification of the bear market, and then you've just had the rolling bad news. We've also highlighted the value of a splitter. This is something you don't get anywhere else technically. This is HVF method theory. You can go and find out more about Hunt Volatility Funnel method by going to the Market Sniper and booking a call. Why is it relevant? What does it matter? What do we do with it? Etc. etc. But there's clearly a constriction. So, and we are skidding along the lower line. So it's no surprise that with the wall of just bad news and the hyper over leverage. So whilst we suggested you could get leverage long and you should be getting out here, it was quite clear a lot of people were getting leverage long after that, very high up. Even Michael Saylor's weighted average entry, I think, is in and around 32, and you're sitting at 69 now. That's not proven a good investment so far. Even if it does come up, he could have entered far better. If he was an HVF trader, his aggregate entry could have been somewhere down between the 8 and the 10k mark. Of course, he would have had to know, benefit of hindsight, all of that, etc. And accumulating the amount he did, he may have moved the market as well somewhat. But he should actually have a weighted entry cost, even negatively, in it, had he understood macro technicals around about the 12, 13 level if he started buying at the 9s, 10s level. Anyway, all that being said about this, what do we conclude about this? Well, it's typical as you're skidding into these lows and you had a strong rejection there, which was again the FTX news. You're getting a little bit of a hammer and a little bit of a rebound. But it's also important to remember that this is a chart of two parts. And this is the bit where most crypto people fell apart 2 years ago. Now everyone has woken up a lot more to macro. Now I'm seeing other crypto channels actually talking about things like the dollar and the macro environment and interest rates and 10-year yields and everything. And a lot of the crypto guys that were purely crypto have suddenly lost some of their allure. The on-chain analysis guys, everything like that, they're being forced to have a proper look at the dollar and realizing that the macro has been driving some of those things. So what could you get here? Well, we haven't flipped majorly bull. But for the short term, if you are saying what was likely to happen over the next couple of days into the weekend, and I've got to warn, that could all change because we have a non-farm payroll number that is coming out tomorrow, and a bad number there could in fact mean even more, in other words, unders on the number. That means employment number, how many new jobs created, could in fact lead to a lowering of interest rate expectations in December, which could of course lead to even more upside for risk. So since Jay Powell spoke last night, the equity markets have run, and I will show you that just for a small bit. I know you're interested in crypto, but you have to recognize it's a pretty singular world. Dollar down, good for crypto, good for equities, good for the euro and all the battling currencies. Dollar up, fear or rising rates, bad for the debt markets, bad for the equity markets, bad for the crypto markets. So the crypto does not have its own independent driver. However close we might be getting to being within the next year or 64 days, whatever the macros for halvening, at the moment this is being the dominant theme, the macro. So whilst you could drift upside for a little bit short term, that doesn't mean all is well and love and light. You can come back down like that, another rejection on the splitter. You could in fact go all the way to the other side and then get at least into the upper half and at some point have a break. That could happen up top here. It could happen, so it could happen sooner, or you could roll over. But the point of just highlighting that there is scope for a little bit of a grinding move somewhat higher for crypto does not make you a macro bull, which I would say is the weekly time frame that we're on. Super macro, the everything chart, again, as I've said before, something that started at $1 that's 17,000 today, as hectic as the drawdowns have been, still broadly has to be considered a macro bull, especially when you should be looking at a log chart for something so long of duration with such high volatility. So I'd listen carefully to the use of phrases there of what I'm trying to mention and get you to think about. So macro. So I'll just pivot to that and let's have a look at the the inception of Bitcoin. I'm going to turn that, it already is log scale. So there you go. So if we go from 2012, so this should be Stamp. Yeah, it's one of the longest existing exchanges. You can see that this still has to be considered bull, macro bull. There was the continuation that we highlighted over there. That was the big, and then you're having a downward correction. So overall, you're in a correction. Listen to the language again. A correction is something that occurs in a bull market when you pull back before potentially going back and reverting back to bull. So for the hodlers and the people that are dyed-in-the-wool Bitcoin enthusiasts, they'll be hoping this is just a correction before making a new high at some point that will take out that high, which will be consistent with previous bull, bear, bull, kind of bear, but on a shorter time frame, but really a lengthy consolidation. So that's why I say the cycles have shifted. As much as people think it's the same bull, reversion to bear, reversion back to bull, reversion to bear. Actually, there have been adaptations to that cycle. And our opinion is this was one macro continuation pattern that ran from December 2017 and triggered the break at 2020. And if as we've shown before, on our charts, you will see that this dovetails also with dominance cycles of the dollar. So there we highlighted that on the macro, this would still be a bull chart in a corrective phase. And note that we've log scaled this to reduce the over volatile tendency of what is a high beta assets class, so that you can see the scale. If you do it on an unlog, on a high beta, high volatility asset class on a very lengthy scale, you get a crazy chart like that, which is very difficult to interpret as being bullish after a sell-off like that. But on the log scale basis, on a percentage basis, which I think is the correct way to view it, you would still say macro bull. So okay, we clarified that in terms of time frames. That said, as we go back to the weekly, and again on the log scale still, because it's an extended time, you might get a rally, which is a move upwards as opposed to a correction, a move upwards in what is currently still a bear market pullback. So again, listen to the language which says you still have to be treated as a bear until you've proven you're not a bear. And so this would be a rally. Whether it goes all the way up, even to the other side, it would still for me represent a rally. And it could come back down, You could have nasty macro events that are going into the end of Q4, Christmas into Q1, which is a suspicion I have. And we'll talk about that in a minute as to why that would likely be. And you could go all the way down here. This would have constituted a rally in a bear market where you still see subsequent lower lows. So if I say on Twitter, it's not overtly bearish right now as I did, and everyone goes, oh, so you flipped bull now. What I'm saying is it could go up for a period of, but it will not constitute a reversal until we start taking out previous highs. That would be the first warning, and you'd need a fair amount more upside action actually before you could be very clear. Ideally, we would like to see a reversal pattern, so something like a left shoulder, a head there, and if you were to go up to the 25 again and then give us a right shoulder and then break out, you could argue at that juncture much higher up that on a big enough time frame we've started a reversal. So we won't be the first to call bottoms, and people that are straight in calling absolute macro bottoms are mistaking a short time frame period of lack of downside, and they're just using anecdotes such like, oh, there's so much bearish FUD, bottoms always occur on bearish FUD when you fail to make new lows. Actually, this is occurring because the dollar's weak. The dollar's weak. So the dollar that we highlighted for you all was in a bull run. The dollar index is the typical benchmark. It incorporates a lot of the euro, the pound, the Swiss franc, and some of the yen. And we showed you this, and this is correcting quite violently to the downside. This I have to go up to an even bigger time frame, take that off, to remind you that we'd given you this as an upside bull market, and it has made the target of 110.3 we called for, and as a result it's in a corrective down move, but in a bull trajectory on the macro. So let's cover that. If the dollar is in a bull trajectory in the macro, that's going to clash with the Bitcoin's bull trajectory on a macro. Which one wins out? Well, we'll have to see what happens in the macro world. So here again, we clarifying that here's the battle of the two. You've got to remember it's Bitcoin versus dollar. So what the dollar is doing does absolutely matter. Now, I haven't touched and moved this chart. This was a prediction where we expected continuation. This has actually come back pretty hard, a little bit harder than what I scenario cast for. So that is a good slap in the face, but also made the other side of a channel that we'd drawn, and it clearly made our target of 110.3. Now, it was interesting, as we were having a melt up through that, everybody naturally becomes a chaser on a fast move. They don't see the blow off, they don't have HVF method, they don't have a target, and we heard guys saying 125, 130, very popular dollar bulls saying that. And we said, careful now, you're assuming a chronic degree of overperformance after something that has been pretty straight line up. and we took that right from the head and shoulder down here, and we even suggested that it's got to turn before this 87 level to avoid running that previous low for this scenario to play out. This scenario has played out, and now it is due a pullback. So this is a very stimulus orientated environment for Bitcoin, and Bitcoin's far from shot the lights out given that element of news. If as an alternative in the risk back on markets, let me show you the Dow Jones, for example, as an alternative to Bitcoin, so you can see how's the Dow done in its recent movement so far. That's the US 30, and again, if I just put that on the weekly time frame, that's how the Dow's done recently. It ran a head and shoulder to the downside. It's just dropped that time frame maybe a bit more, even daily. Rescale that. It's run, and we said it was going to go down and run a head and shoulder target, whilst Mr. Hunter said it was going to go up 60% in 4 months. We said, no, you've got a head and shoulder. This is going down. Now, risk back on. The optimism about a pivot is doing that. But I warn you again, there's a bit of a broadening happening there. Be very careful. It has done a lot. It's assumed a lot right now. And you have the non-farm payroll number coming in. That's an ascending broadening. This did look like a bottom and that it was going to have a reversal right there. You will see here quite clearly a W bottom structure that did imply a change, and very close to being necklined on our target for the bear side that was made at that point, which we called on our Market Sniper channel. Don't forget to go watch that. So if you compare how the Dow has performed relative to Bitcoin, you can see in the risk on world, Bitcoin is not shooting the lights out. Of course, you will point to FTX, BlockFi, many other news-related events that have been clearly a headwind, and I would understand that. That doesn't change that technically, that this is barely 6% off its high. So again, you grab your ruler, you go and put the lock on, you grab that top over there, and you pull it to where it's trading now. Well, at its very highest point, it was only 6.28. We've traded a bit down today, 6.28. So if I take it to where the market is now, which is the current candle, it's still a live market. You're at 7.1%. Imagine Bitcoin was only 7.1% off 69,000. Well, that would be less obviously than 7,000 because it's only on 69. It's on 710. So it would be around 5.5 going on 6,000 less than 69. You would be somewhere between 62,000 and 63,500. That's very different to where we currently are. That is a function of both the beta, the volatility, and of course the relative headwinds it has faced. Now it's important to highlight that the Dow's been one of the best indexes currently, because it's not the fluffy growth tech. It actually has real dividends, physical things, and that's shown up. And it's also the 30 biggest companies as well, which certainly helps. So it is the best of the indices, and you'll see if we show you the Standard & Poor's 500, that is not nearly as impressive, but still better than Bitcoin. Still better than Bitcoin, also ran its head and shoulders, but a bigger distance off its high by a percentage. So this is a world of understanding the varying levels of risk on, risk off. You can see you are 15% off today, but at the absolute lows down here, you were in fact 27%. So it's already reduced by half, almost, the damage of most recent lows. Now, I want to just show you one particular chart that is another key thing as to why I remain very cautious about crypto. This is important. Look into my eyes, look into my eyes, fantasize. If we have a look at the charts I wanted to show you, this is a chart I scraped from Prector, and Alessio had featured it, so I thank him for bringing it to my attention, and I literally took a screenshot of his YouTube. And I've actually been speaking quite a lot about this chart recently, and there's a reason why. Because it's a very interesting study that Prector of Elliott Wave did. Credit to the people that did the work and the people that brought it to my attention, that showed when interest rates actually turn and what actually happens. So initially in the 70s and 80s, interest rate, the blue line, So follow my pointer here. We're pointing at the blue line down here. There was a lot more skittish interest rate policy. They do a lot of increases, then they do 2 cuts, then they do more increases. Generally, as the debt has got bigger and the reactions and the response larger, they become far more smoothed and far more predictable. You don't tend to get this localized high, a cut in rates, and then boom, another stab up in rates, and then a cut. And the line has gone from quite complex to relatively simple. Up, stable, down. And that helps. But even in the more skittish period of interest rate policy, you can see that actually the worst part of the down moves happen once the top on interest rates has occurred. The worst part of sell-offs. In other words, everyone is buying now on the notion that the Fed is closer to finishing tightening and will start cutting soon. This is pure fluff and froth being pushed into a Santa rally, and possibly on thin volume, an attempt to dress up terrible returns, because many of them are involved in the 60-40 equity bond splits. Bonds have been devastated this year, and equities are pretty poor underperformers too. So they're desperate to try earn their performance bonuses potentially. That sounds a little bit conspiratorial. I'll leave it out there as a possibility. There's the typical Santa rally, and then there's a bit of a hangover later. But what actually happens, and there's clear signs the economy is rapidly slowing. So in terms of economic growth rate, we are doing something like that on the growth rate. In terms of inflation, the inflation has been stubbornly strong. I'm going to draw simplistic lines. It is showing some signs of slowing down, for example, but just let's leave the recession, which clearly started as per the correct definition of a recession some time ago, and we are starting to see more and more evidence. The Chicago survey was one of them, which was as bad as it was in the guts of the pandemic in 2020. So what we actually find is we've got too low an inflation rates for the inflation. You actually need a higher rate than inflation. Never before above 5% have you saved inflation by having lower rates than the actual inflation. You should have higher rates than the inflation. So in terms of inflation, the inflation, that's the pink line, our rates should be above this line, somewhere there. In terms of the fact that we are absolutely tanking in growth, which is the blue line, we actually should have rates lower, a lot lower, to stimulate and to try bounce this line up. So you actually have a dichotomy, and this is why we call this the credibility gap that is hyperstagflation. There is no set of rates that is actually right for where we are right now. We should be higher on one hand to fight the inflation, and we should be lower to start already saving a tanking economy. And you will see more and more evidence of this as the year goes through Christmas. Retailers report their not so good Christmas experience, etc., etc. I anticipate to see quite a lot coming out in which will further confirm. Remember, there is a lag in interest rate policy. Anyway, what's all of this got to do with crypto, you're asking? Because you're purely interested in crypto. Well, you need to understand the whole great game. The biggest falls are usually event driven, and we're yet to hear what the event will be. Is it a pandemic Mark II? Is it a Russian hack on banks? Is it a banking collapse, Credit Suisse derivatives? Is it a repo market issue? Is it China, Taiwan, Russia, Ukraine escalating? Is it, take your pick of the multitude, monkeypox, all queued up, waiting to do a major demand killing event. And whatever that event is, here, for example, it was the .com, there it was the subprime crisis, and there, of course, it ended up being the pandemic. In all those instances, massive downlegs occurred subsequent to the reduction in rates, and we have not yet got to that point. So you keep piling fluff into the risk on market. So whilst I'm talking about the S&P here, this also has real bearing on Bitcoin, crypto, and liquidity in as a high beta investment class. So what do high beta investment classes do if the equity markets are throwing it down in the S&P 500? They throw it down harder as a high beta. And you'll say, but they're already much lower. Yes, that's a mitigation, but they will not go in the opposite direction to everybody seeking liquidity when assets are being destroyed, when the reverse wealth effect is kicking in, when people can't sell their homes, when they can't meet their payments, when job layoffs have started to accelerate. All of these things of the whatever happens, or a global lockdown for climate, for monkeypox, for Mark II, COVID, whatever. All of these things are demand crushing events that will destroy the stock market, and that the rate cuts that will follow almost certainly to zero. So we almost bottom zero after .com. We held zero for nearly an entire decade post the subprime crisis, which proves to me that this was actually a depression in 2000 that took so much to get, including a housing market boom and then a subsequent hangover that went on forever. Now, the key thing is this rate is higher than the 2020 rate, and there is more debt around. So the cost of serving debt is higher, and there's more debt. It's bigger. So what do you think the crash is like with the cost of that debt being higher and the amount of that debt being bigger? It is going to be bigger, my friends. Unfortunately, we don't do small recessions anymore. And if we were to do any form of lockdown, the effect on the stock markets would be even more violent than this, in spite of interest rate cuts. So the bulk of the loss on the stock market are still to come once they start cutting. They haven't even stopped raising yet, never mind flatlining. And you notice what I mean by how the bank rates curve has got ever simpler as we are greater and more sensitized to the volume of debt out there. Okay, so what is that as a backdrop for your token Bitcoin and crypto markets as a whole? Ask yourself, is it a bullish circumstance? Does halvening and on-chain analysis overall a possible 30% crash on the Dow, or maybe 50 as it's already rallied a lot, maybe 30, maybe 20, who knows? What does it do to the NASDAQ? If the Dow loses 30, the NASDAQ loses 45, it's a higher beta version. ARK falls another 30% after already losing 70%. What do you think that will mean for crypto? Which is why I take you back to the Bitcoin draw and say to you, the fact that you may on a short time frame get some rally is more of a bear trap that you should treat with suspicion, and you should suspect, despite the fact that it may rise, and many YouTube callers are maybe calling for bottom in, and be very cautious of non-technical bottom callers that want to be the guy to be first, that want to be the hero, and that want to be the good news bearer. Everybody realize that good news sell. They'll get more subs. They'll get more guys clicking their link on the exchange button at Bybit or whatever they are punting as an exchange to get people opening crypto accounts if they sell a new bull market. I have no incentive to be negative and bearish. It doesn't sell. It doesn't send people particularly more to my site by being bearish. It doesn't do anything particularly. You're not going to use any of my links, which are to precious metals, which I think everybody should have, or visit anymore. I really don't care. I'd rather just get a reputation for calling it exactly as I see it. Good, bad, neutral, or ugly. So whatever happens in here, I would still anticipate that there's going to be a larger new low to occur. That there could be a larger new low to occur. Do I have anything positive to say about the market structure? Well, what I will say is that overall the descent that I've forecast here in the splitter of the falling wedge is not nearly as aggressive as the up move. So in that sense, the down legs have lesser momentum, and I refer you back to that super macro where this is a correction in a macro bull on the log scale. Remember, log scale for high beta asset classes over big time frames. Understand why we do the things we do. Okay, so that's a little bit on Bitcoin, and you can see this minor green candle, everyone calling bottoms. It is lower vol, so you do tend to get that little bit. Remember, non-farm payrolls tomorrow, live trading day with us, by the way. You can book and come and see us analyze and see that data in a full hour and a half crypto session, a full hour and a half traditional market session where we'll talk about some of these things. So how long will the dollar be weak, we ask? Well, the interesting thing that goes with the dollar is that the bond market, the debt markets, and I'll lose many people when we say the debt market. People don't understand. They're the most important, one of the most important markets. Debt markets and currency markets are the huge markets. And the relative differential between how debt markets are priced, like Japan, only paying 0.25, high value debt, oh dear, apart from the fact that no one wants to bid for it, but they are supporting an overinflated Ponzi, versus, say, the US, where the rates have gone up and the debt values have gone down, inverse relationship to debt. What you actually see is that where money is being treated better, the money ran from yen into the dollar until recently. And what started to happen is the expectation for debt pricing is starting to go down at the moment. So if I just clean the face and show you on a lower time frame what's going on in the debt markets, you can see as we were driving higher on the yield, and as yields go up, values of bonds go down, we were getting a deflation in the value of the debt market. Bond markets have been the worst performing, some of the worst performing assets of all. As we're getting a deval move down here, the dollar softens. So as the debt market was going up in yield, actually the dollar was strengthening because there were greater hikes going on in America than the UK and many other markets. So this is a bit of macro understanding for you. So at the moment, this correction, and I think it's a correction, although it can be a correction that first does a pullback right down to these levels type correction, that could be in a demand destroying environment. People will hide back in debt again because as rates get cut, debt values go up. So that's one of the few places in fear capital appreciation occurs, that we will still then end up going higher and you'll see debt destruction again, like you have seen. In short, we called the top, in our opinion, on the debt market when this occurred. We said this is the beginning of a macro rate rising cycle. And if this were to come back here, it's small beer for how much it's done, from 0.3 up to the 4.3 mark. That's 4 full %. This can come back 1.5% and still be just a correction in a bull market. So now you've seen debt markets, you've seen the dollar. Let's go back to crypto. So the other thing about this is with Bitcoin, have a look against the other currencies. Now, if you have a look at Bitcoin Euro, and I'll just put it back on the 3-day, it doesn't look as bullish, does it? Answer, no, Francis, it doesn't. And this is just pivoting from one currency that has been rather weak, the dollar recently, versus one that's actually getting a bit of a recovery bid, but has umpteen problems with it and will weaken again. So if the euro's to weaken again, it weakens against what? It weakens against largely the dollar. If the dollar is gaining against the euro, that means a risk-off environment. If the equities is correcting downside and the interest rates are being cut, that means fear, that means a run to the dollar, and everyone looking to the Fed to cut rates. That will see further risk to the downside, equity sell-offs, euro sell-offs. So we actually, if you're a Bitcoin bull, you want to see the euro being strong against the dollar, and in actual fact it's been weak. Remember, we called the euro USD short on a head and shoulders at 1.18. We can do a quick show of that if you want, but the key part is this move is very soft. It's a 3-day little hammers, low vol, weak little rally, and most of that candle given back. That's BTC against the euro. That's BTC against the pound. Even worse, barely a green candle, we call that a hammer, and that a shooting star. That means it's been Bought up a little bit when it was low. It has no zip to hold on to the 14,281 in GBP, and it's back down at the 13.8. So it is pretty soft. Low vol, but soft. Is it slowing down on its descent? Yes, it is, in terms of that. So there's your good news bits. You know, since that flag, that was brutal sell-off, down, small wind up, and another massive leg down. Since this, you're not significantly lower than that, but you are lower. But we can't assume that this is all over. So another continuation on a rising wedge, on a flag, and you could still see a further downside. If we have a calamity, an event-driven sell-off where the Fed changes rates, they break something in the financial system, or something health related comes on, all bets are off and down we go. They are trialing their CBDs, my friend. They are sitting in the wings, and they don't trial, they drill, according to me. And I keep repeating this to anyone who will listen. So in my worldview, there is a real possibility that they'll go live on the introduction on something that they've been real keen to bring in for an extended period. So this is what you face. So a little bit of a rally or a little bit of a churn, and you can be back down against the pound, against the euro, and against other currencies. Even the yen has firmed up quite some bit. Have a look at Bitcoin versus the yen. This has been one of the weakest currencies of the year. Does that strike you as bullish? The guys that called the bottom, do you think they looked at the BTC yen, the BTC euro, and the BTC pound chart? They're seeing a spot of dollar weakness that is reflected in their Bitcoin chart, and they're not even noticing that the Dow's done 10 times that. This is the key problem about not having macro 360-degree view and being always calling the moon. Always calling the moon. You don't want to be the guy that's always got the moon in your name, because they are wanting to tell you what you want to hear rather than doing serious analysis. So what are the tokens that might overperform Bitcoin? So I'm going to give you one, and I get a lot of requests for this to actually get more coverage. So I'll give you this one, and I hope you've stayed on until this long. Please hit a like and share the video. We're going to be doing a little bit more often on crypto regularly. So if you'd like to hear more and tell us what you want to see more coverage, we certainly will. Let's show you XMR BTC. So inside our community, and I seriously haven't looked at this actually since we last decided it was an upside, and I'm amazed actually how it really has moved on quite some bit since we last looked, in fact. So we thought that this would turn into some form of continuation, and it has. In fact, you've got quite a decent bit of Monero strength. So what are we saying? This was a bearish spell over here, broadening structure on a down leg that was ascending. As a result, we expected it to break to the downside, high momentum to the downside. This is a critical level, 2004. That's shown on the macro. You can check into the marketsniper.com and get into the community if you want to see more detail on where those lines came from. Another reversal there, W bottom on that level, that got you up to these levels, and now you find yourself working your way back up, and look at that. So actually, in a relative performance, we're seeing Monero as a privacy coin. Are people going to start valuing privacy? I don't know. Is it fully private? Can the dark state hack it? Did something happen when they grabbed Fluffy Pony when he was in the States? Who knows? Who knows? Who knows? Will you have a red flag if you get engaged with it? Who knows? Who knows? Will you have real privacy? Maybe. I like the concept of privacy. I just don't know there's any real place where we get afforded it right now. But the overall macro on this, if I do fat cokey for you, also shows that this is a key zone as well. So you've got that high volatility, big spill, snapback. Lower vol has a fractal of a smaller structure in it that performs. It was actually a little bit of an inverted head and shoulders with a double head as well, because it was a shoulder there, head again, right shoulder for that neckline. It gave you the break to the upside. But let's ignore the excessive complexity. A bit of volatility here, certainly, but all the wind up and calming that is now bringing you to the level very similar to this point. So what you sometimes get is you get these nestled head and shoulders in the same way as this is a smaller one inside a bigger one. You could in fact be making a key level over here, which will map with that key level, and you did run it. This was a localized high. This in of itself was a little bit of a W with a very similar neckline. So lots of key levels being approached as you go to 8.9. You're at 8.395. That's 8.4. As you go 8.9, 9,000, you can see I've got alerts in there. That's going to be a very interesting level. You could actually get a pullback, a bit of a reaction on that with XMR. But this is actually showing, since roughly March of this year, a little bit of a ziggity-zag volatile moment. But since March this year, Bitcoin versus Monero has seen Monero do better in relative performance than Bitcoin. We highlighted this to you on Binance, if you recall. So actually, we're also reminding you of a second of our dominance tokens. And this has been a real outperformer. So here you have two tokens that you've been warned about that will outperform Bitcoin. Now, Binance, having just run twice its target and having a bit of a sell-off, would not be an acquirement right now. And in fact, as Monero approaches that 899,000, you could expect a reaction, and it may not too. Going back to Monero, if you just have a general dominance, so this is not just Bitcoin, but Bitcoin is clearly a large part of it as one of the biggest market caps. But if you just look at it, Monero versus all, which would include Ethereum, and then as you run the rack via all the other tokens, it is also shown pretty good general overperformance. It clearly was underperforming during this period. You can see that low. You can see that failed attempt to go away, back, weak bounce, and that was a key moment. And it was a spiller, it was a thriller all the way from Manila. You rally back roughly almost a return move before going into the low here. But that W bottom did in fact trigger on the dominance, and you have in fact made that target. So now what are you getting? Well, on a slightly lower time frame, if I clear this up for you, how's it looking? Let's go back to the daily. You are still inching your way up and showing relative strength for this token. Grab it. There is a squeeze. Little bit concerned about the rising wedge. You can pop out the top. At some point you might have a little bit of a slab down, even if you pop out the top. So that is grinding higher, being bought on the dips. So it's becoming more clear that it is sought after. This can turn very super bullish, but often it also can be an exhaustive. So it's a bit of a dichotomy of one of them. You could even go down straight to here and have a little bit of a spill, which dovetails with that 899,000 level being reached and a bit of loss of progress for a while. Why not wait possibly for that, or just take the next move up to those levels and then take some profit before getting back in. So that's a little bit on Monero versus Bitcoin, Monero on dominance. What I will do, as this is a Monero share, I will also highlight Monero versus Ethereum for you, so that you can get a bit of a bigger picture across the two biggest tokens. Again, now ETH has been a tougher benchmark than Bitcoin, but you can see also roughly from the beginning of 2022 there has been a recovery element that has gone on with it. So will it continue its relative overperformance against a pretty stiff benchmark? We have highlighted that the tokens that will outperform Bitcoin, and let me just be clear, outperforming Bitcoin currently does not mean upside and a good buy in a category that could be going down. So this is if you absolutely have to hold a crypto, ones that might go down less in a bearish market or go up moderately more in a sideways, slightly bull for a short period market. So none of these necessarily are what I would consider screaming buys. It's relative over performance for this Santa risk on period that could suddenly flip with event-based risk. So personally for me, I don't need to be in on this. It's kind of like trying to collect a few extra pennies in the fast lane of the highway. You could get absolutely clattered if you don't scuttle real quick when the tide turns. So that's a little bit on Monero. There was something else that I was thinking to show you. We can take a small look because we haven't spoken to you in a while on the totals. Again, similar descending grind line. We've got a little bit of a head and shoulder that we're working. A little bit of it was a small shoulder. So it's a soft head and shoulder, for example. I would say it's kind of small shoulder. You need to drop it into a lower time frame for it even to come into visuals. This was a very strong original left shoulder, but then you made marginally higher high, and this is when things started to get a bit sketchy generally for the market. You started to get grinds, you started to get channels, and this is what led to eventually letting go. And then the news always catches up. You get the events. You know, what we didn't realize is that the strength of Binance token is actually based on the fact that FTX exchange would go down and Binance would be the largest speculators available perps leverage platform for trading, because that's essentially what we do. So on the total, you can see a little bit of a grind. This can come down. You can run this low as well. Overall, there's still that potential for that possible head and shoulder to play out. If I put it on the daily, you'll see a bit more of that right shoulder in there, and you can see how it too was a little bit of a squeezy Japanesey inverted HVF at a key level, the 400 billion mark. And even though you've rallied, note that these rallies have subsequently seen lows. So this has all been a walking it down negative. Imagine now you were to get a COVID Mark II in this environment, this could spill. Okay, please leave your comments, give us a share. If you want to hear on any other of the major market cap tokens, we're happy to talk to you about the others that will be doing well on a relative strength basis. But do remember, event risk to the downside. Oh, and let's just, on Bitcoin, I didn't show you the Bitcoin versus the NASDAQ. Similar type structure against the NASDAQ. We had grinds and then spills. We've seen Bitcoin do this before, where it stopped going down relative to the tech index, only for it to get slammed. Look how uppity and bullish it would have been looking. Boom, a pop out the top of the 3 impulse rising wedge, just like we warn often happens. We call that a type 2. Go to themarketsniper.com, book a call, smash down to this lower level again. And now low vol, and hence you can grind all the way to here, and the same can happen again. You could in fact grind all the way over to there. So Bitcoin for now is still underperforming and slipping to the downside, like the tech, worse than the tech market. It is doing worse than the tech market. It's very important for people to keep that also in mind. Okay, without further ado, we'll leave it there. We will be doing live trading day tomorrow. Jump in and watch us. Make sure you subscribe to the Market Sniper. We'll be updating you on all the traditional markets and how they play out. And we regularly reference cryptos. That's the Market Sniper. Follow us on Twitter at the Market Sniper and the Crypto Sniper. Thank you for watching, and we will see you on the other side. Do not respond to comments. We will never message you or ask you to make investments in the comment section or on WhatsApp or any other. The only way to engage with us, themarketsniper.com. Again, I say good night. Bye-bye for now.